As we take a look towards 2026, media investors weighing streaming margins, content discipline, and whether consolidation can drive better returns. Joining us now to frame the outlook for the sector, Barton Crockett, Rosenblatt Securities Senior Internet Media Research Analyst. Barton, on that note, let me start with Netflix, because it's been a question to me, of course. They have a merger agreement to buy Warner Brothers, or at least the streaming and studio of Warner Brothers. How do you view Netflix as it heads into next year? Obviously, it will not close the deal for quite some period of time, if at all. But how do you view it from a multiple perspective, from what that says about the company's business and how you view the stock?
Yeah, look, we moved to a neutral rating on Netflix around this deal. We do think that this is going to stretch out. We think it could potentially become a competitive bidding situation. And we think it raises some questions about Netflix's capital kind of allocation priorities. And, for those reasons, we had formerly thought that Netflix could trade at a premium to its growth rate. Now we think it gets less of a premium. So we've got a $105 price target. Still a great company, but I think it's going to be hard for the stock to really work as we digest what in the world is going to be the outcome here. And clearly, two very different outcomes if they win or if they lose. I suspect at the end of the day, they're not going to walk away with this because I think, the party on the other side, the Ellisons, can just write a bigger check. And I think ultimately that's what it comes down to.
It could, although Larry Ellison didn't become one of the world's wealthiest men by making poor economic decisions. That said, either way, let's say Netflix just remains obviously in contract to purchase streaming and studio of Warner Brothers. They're not going to get the deal done next year. So is the stock just dead money as it waits for the regulatory approvals to potentially come in?
Yeah, I think it's hard for the stock to work when there's concern about them having to raise their bid. And I think that's really kind of the biggest overhang. And then, in terms of like the core business, I do think that, one of the questions that comes up with this deal that they've entered into, this agreement that they've entered into is this really the right place to put this much capital at this point? Netflix has clearly done great with scripted content and TV and movies on their own. Do they need to put all this money to get, more kind of scripted content, great scripted content, but more content from Warner Brothers? Or would they be better off moving in a different direction where there's more user growth right now in places like user-generated short-form content or lean deeper into the free ad-supported television areas? Both of those seem to be, much stronger areas of consumer interest right now. And, I think we have some concern that perhaps they're overly distracted by, what's been their strength, which is scripted, and missing the change in what's happening in the market right now, which is these other formats.
I wanted to ask you about this Meta deal today. So it's buying Manus, which at one point it's an AI agent company, right? One point was hailed by Chinese state media as the next DeepSeek. What do you make of this deal?
Look, I think that this is potentially a great deal for Meta. It's a deal that, time will tell, but, it has the markings of what could become something that we look back on years later and think, geez, this is not too dissimilar to the home run they had with their acquisitions of Instagram and WhatsApp. And, what I think you get with this deal is you get just a rocket ship growth story in agentic AI that fits really beautifully into all of the things that Meta has been leaning into SMBs, services internationally through WhatsApp, what are kind of, over 10 billion kind of revenue run rate growing rapidly businesses within Meta. This provides a whole new kind of product suite that's kind of clearly demonstrated a great product market fit with what they've done thus far and could really be kind of supercharged underneath Meta. So we think this sounds great. We think the Chinese tie, is a question, but the company has moved really aggressively to distance itself from China, laying off its Chinese employees, moving to Singapore, not really doing business in China. And from what we're reading, it looks like the deal is completed. So, this could be really, we think, great for Meta.